Hello and welcome. This is Brandon Wendell, Charter Market Technician, and I'm going to do some analysis on the energy markets for this week, January 22nd. So these are just personal observations, not giving any recommendations to buy, sell, or hold any securities. We'll start off on the weekly chart here of crude oil. We can see that we obviously have been in a nice impulse to the upside. Our previous move, let's see, we had, oops, what happened there? That did not work out correctly. So let me try this again. We'll go ahead and do the impulse correction. And actually, no, it did work. You can see we've exceeded the duplication of the preceding impulse, and we may be heading on our way up to the 1.618 extension. However, we're going to run into a little bit of problems. And here's the problem that I'm seeing right off the bat. You've got the impulse that made a new high, but we have very little momentum compared to what we did before. That's called a negative divergence. Now, it doesn't mean we're going to have a huge crash, but it does mean there should be some sort of a pullback very, very soon. You can see in the last big divergence that we had back here in 2021, that led to a correction back to an area of demand before we were able to rally to some new highs. This one happened much, much faster, and it is a much, I don't know if it's a much bigger divergence. It's about the same. So I would expect a bit of a pullback coming up very, very soon. It could happen this week in the markets. So we'll clean this up. Ultimately, though, I think we're going to be moving up to that 95.24, but we got to pull back first. And if we go ahead and throw in these Fibonacci retracements, we actually measure where that pullback is likely to occur and where it's likely to resume the overall uptrend. So here we are in our pullback. We have a couple of areas of demand that we're likely to pull back to. If we get just a weak retracement, you can see our very first area of demand, this 82.29, 80.91, actually lines up with the 23.6 retracement value. So if we just get a small retracement, that's our first spot to pause before continuing. If we go a little deeper, then we've got the 38.2, which is right above 79, the whole number, and 77.34, that next rally-based rally area of demand. Just below that, we have another zone. So not sure which one of these zones is likely to work, but this is pretty high probability for a bouncing point at 82.29 because you have both the Fibonacci and the demand zone that line up. You got that confluence, if you will. So that's a much stronger area potentially. And if it does start to rally from that area, I would say, let's see, we got this impulse up, correction back down to 89 or 82.29 area. I would say your next target up is 90.40 and then 95.40 afterwards. So that's what I'm seeing so far on crude. We can go down to a 4-hour chart, see if there's anything else along the way. As of right now, as I said, we should be expecting a bit of a pullback. I don't really have any great entry point for shorting, but I would look for shorting opportunities until we get to 82.29. Of course, you need to be out then, not only at the 82.29, but just above it, there actually is an area, rally base rally right there at about 82.82 to 81.33. But I think because that confluence, that area that was pretty strong inside at the 82.26, I think that's where we're going to end up going to before we bounce. There's also a small zone inside of this as well, just below that area. So lots of buying pressure, lots of demand in that area. I don't see us pushing down below that without some sort of a significant bounce. So that's what I'm looking for in a pullback, looking for a buying opportunity. This one's actually been tested right there. Just realized that we already bounced. So if we come back, we should go deeper. So keep the original one right around that 82.20 area as an opportunity to buy. Going all the way down to the 60-minute, I don't think anything else changes here. There may be an opportunity to short until we turn around and start to rally. Right here would be your shorting entry. Yep. So you got a rally-based drop, again, where you could possibly sell at 86.10, 87.10, a full dollar zone there on the 60-minute. We may just roll over from here and move down to that 82 area that I was mentioning already. But if we happen to rally up, I would look for a possible counter trend trade from 86.10 down to about the 82.20 area. Moving over to the nat gas, let's take a look. And I'll start off on the bigger picture here, the weekly chart, and just get an idea of what's going on there. We'll go ahead and clean this chart up. There we go. As you can see, we've got a bit of a pullback after we tried to bounce. You can see it was met with a lot of selling pressure this past week, and I think that we're going to continue to impulse to the downside. If we measure our previous move, our correction, the next impulse could take us all the way down to 2.682. there is kind of an area of demand actually above that area on the weekly chart. The area of demand that I've got right now is this, about 337. So we may stall out there first. We go down to the daily chart. Let's see what's going on there. So looking at the daily chart right now, again, we've got these moves to the downside that we're experiencing. And if we take a look at the previous impulse down that we experienced, we have retraced pretty deep already. Let's see, if we go to retracement, and about 61.8%, it looks like we're continuing our impulse now, like I said, to the downside. So if we kind of adjust this timing a little bit and movements, let's see, or measurement, excuse me. No, that was the weekly impulse down. We can't really do anything different with that. Just trying to give us an idea of the targets on the move to the downside. I suppose if we're just looking at the daily impulses, there may be a little bit closer of a target here. Impulse, correction, impulse. You see it takes us right to that next area of demand, as a matter of fact. So that's a pretty good target. As far as our opportunity to get short, if you're looking for that, we go down to a 4-hour time frame and let's see if there's anything a little bit more. Yeah, we do have an opportunity here. It looks like in order to target, like I said, the 337, there is a great area of supply right there. And you're looking at 4.015 to 4.080. You got drop, base, and collapse. We may not even make it that high. We are already responding a little bit to some of this drop, base, 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 and drop. And we already started turning down a little bit, but obviously we're a little late. So what I need to do is wait to see if we're able to continue to move back up to about 4.015. That'd be a great shorting opportunity targeting the 3.337. Additionally, this may be some sort of a corrective phase as prices are, let's see if I can just duplicate this. Well, it's not really in a channel, but close. Actually, it is. Look at that. Got kind of an upward channel right now that if we break down, there may be an opportunity to sell there instead of waiting for it to rally all the way up to supply. So what you look for in this case, I usually don't trade the breakout. I wait for a retest. But what you could do is possibly short after it closes below this line and then trade the short sell, the retest of that line as supply, again, targeting the 3.337 as an area of demand. That way you're able to participate in this move in case if it doesn't go all the way back up to the 4015. So what I'm expecting, like I said, is a bit of a breakdown. I don't jump in on the breakdown. I wait for it to typically retest, which it does. And if it doesn't, I just miss the trade. But usually it'll retest a little bit and then give you that move to the downside. So when you're selling here, instead of putting your stop way above the high of this range, which you could do as well, once again, you put in right there the trail stop or the stop loss above the high here. The other thing you do is just use the average true range for the time frame you're trading on. So if you end up selling, let's say a 3745, you would insert, let's see, average true range, and that happens to be 0.082. So you would just add 0.082 to what you're trading here, and that would get about, what, 3.81 something? So your stop would be right up here somewhere, 1 ATR above. So that's another way of doing it, kind of adjusting. Instead of actually putting it way up, you can take a little bit less risk. That's what I'm seeing on Nat Gas right now, dropping down, let's see, 60-minute. I don't think anything's going to change there. Nah, I would stick with that 4-hour. So we'll move over to gasoline and start off with the big picture once again. On the weekly chart of gasoline, we got the same divergence we've been experiencing on crude oil. We had a nice big move to the upside, but it looks like we're done for this move and looking for a pullback pretty soon. This one actually did 100% duplication of the previous impulse. So did the measured move. And again, we're looking at a pullback because what we've got is this rally has run out of momentum. And it should happen this week, but there's no guarantees. We do see indecision, so we're likely to break down and pull back at this point. And if we do pull back, we can go ahead and throw in the Fibonacci retracements to give us an idea of where we're likely to pull back to as far as targets. So let's go ahead and fix this. There we go. And we'll drop down to a daily time frame to see if it correlates with any kind of demand. This doesn't look like a good demand zone, really. We have, it's kind of a mess. Here we have drop. Nope, that doesn't quite qualify either. I would not ignore that though. Even though this doesn't qualify as a good demand zone, we do have really good buying pressure that begins at 2.2888. And I would actually look at that as a possible buying opportunity. The only real qualified demand zone is actually right here, and that's above any of the Fibonacci retracement net levels. So we've already retraced back to that level, and if that's all we get, then we're actually going to see much more movement up. But I just don't see it with that momentum dying off on the weekly chart. We've got to have some sort of a pullback at this point. I would imagine that we're likely to pull back, as I said, to this 23.6 retracement, or sorry, 38.2 retracement, which basically puts us right around that 2.2888 area. And that would be the downside target before we start to rally once again and continue to impulse upwards. So keep an eye out for that we may end up stalling out and moving down. I don't really have a good entry in order to be able to do the counter trend short. And let's see, let's get rid of this for now. If we go down on the 4-hour time frame, just above that retracement area is a demand at 23270. Not really good demand at the zone. This is a retest of a prior area. So 38.2, again, there's lots of buying pressure in that area. We may end up bouncing just before it at the 2327, 23016 area. So look for shorting opportunities if you can. If you go down to maybe a 60-minute, I don't know if there's any supply. Oh, there is right here. So this may be all we get, where we have a little bit of supply, and one of two things will happen. Either we break down from where we are, or we rally up to that supply zone 24775. Either way, I'm looking to short and targeting 23270 to the downside. So kind of what we saw before with nat gas and the range. Again, if we break down, clone, there we go. It's not really range bound, but anyway, if we do break down from this trend line, you could possibly retest, sell the retest and target that demand with the ATR as your stop loss. Finally, looking at heating oil, last energy there. We'll go out to the weekly chart and refresh this. It looks as though we've got pretty much the same picture, negative divergence, as we have made a measured move, pretty much duplicating the previous impulse up right there, almost exactly. So we're due for a correction right now. And if we're getting that correction, let's see where we're likely to head to. So we have that move up and, oops, template. There we are. So we go down to the daily time frame, and our pullback, actually the 38.2 here, lines up really well with the supply zone. Look at that. So that's a pretty good target. There's actually a small demand zone right here too. Rally, base, rally. May have already been tested and bounced off of that 23.6 just above it. But there's a couple demand zones here. There's actually one even at this level. Drop, base, and rally at 61.8. But I think that 38.2 is really my target here. About 24577 looks pretty good for an opportunity to bounce and then continue to move upwards. So if we go once again to the weekly time frame here, and if that is our only retracement, pull back to that 23.6, which was, I'm sorry, I forget which one it was. It was this one, 245. Then you've got overhead targets once it bounces of 28722, or sorry, 28782. So right now we're getting ready to correct. I think we're going to move down to the 24577 this week and then bounce. So maybe end of this week, beginning of next week, we look for that bounce. But in the meantime, we need to be looking for shorting opportunities to target that area of demand, 24577. You can see this has already been tested. Even on the 4-hour time frame, it shows up right there as an area, maybe a little bit higher, but you've got that area right there, rally base rally at about 24820. So again, we go down to a 60-minute time frame, and I still haven't found any great entry points. Although we're in a supply right now, maybe we get in as we leave the zone. There we are. So we're having problems getting above 60. That's bearish. So if we leave the zone to the downside, that would be confirmation entry for that short at 26235 with a stop above the high here of 26494. Again, targeting this area of demand about 24820, or you could just use, nope, that was better the way it was, using the higher time frame zone. There it was. That's a 24820. You want to get out before that, obviously, not at the zone. So perhaps you take the profits right around 250 or 249.75, something like that. So looking to sell on the breakdown here and target with stop above. And that's what I'm seeing on the energy markets. So if you enjoyed the video, make sure you hit like and subscribe so you'll be notified for new videos coming up next week. Until next time, everyone, trade safe, trade well, and take care.